All right, folks, let's dive deep into Rolex's billion-dollar gamble. You've heard about their massive investment in new production facilities, but what does this really mean for the market and for collectors like us? Some collectors are worried that Rolex might scale back production due to the recent price crash. Will it happen? Let's get into it. We've got 3 key points to cover. First, what if Rolex decides to limit production from the new facilities? Second, what if Rolex decides to ramp up precious metal pieces rather than the hype steel sports models, to sustain the hype? And finally, we'll talk about an exciting new possibility coming from the new production facilities. You'll definitely want to hear about that. So, why is Rolex investing a cool $1 billion in new facilities? This isn't just about making more watches. Well, it is about making more watches, but it's about reclaiming control of their market and capturing those eye-watering gray market premiums for themselves. Let's look at the numbers. Really look at them. Industry experts estimate Rolex's annual production at 1 million watches, maybe a little bit more. Now, this new investment could potentially increase capacity by about 50%. Do the math, and we're looking at a potential production of up to 1.5 million watches annually. That's not just a bump. It's Rolex gearing up to fill the market with their most sought-after models. And why would they do this? Well, here's why. Here's the kicker. This investment comes with massive fixed costs. We're talking about state-of-the-art machinery that costs more than most of us will see in a lifetime. Specialized tooling that's probably more precise than a surgeon's instruments. And let's not forget the highly trained personnel. Makers don't grow on trees, folks. These costs are there whether Rolex makes 10 watches or 10,000 watches. And that's precisely why Rolex isn't going to take it slow. They need to ramp up production quickly to start offsetting those high fixed costs and capture those great market premiums. And how do I know this? Well, because they called me up to do the analysis. Okay, I'm kidding. But you know that they hired someone like myself to do the project analysis and confirm the ROI. I've done the same thing for other manufacturers. So what does that mean? Rolex isn't stupid. They know which models drive demand. The Submariners, Daytonas, GMT Master 2s. Those aren't just watches. They're the crown jewel of the Rolex kingdom. Let's take the steel Daytona as an example. Retail price around $13,000. Gray market price has been known to hit $30,000. That's over a 125% premium. And the key thing is this. All that premium was going to gray dealers. Rolex wants that money in their pockets. As for precious metal models, let's not kid ourselves. Many are already selling below retail in the secondary market. A gold Sky Dweller that retails for $50,000 might be trading hands for $43,000 or even less. From a business standpoint, ramping up production of these models makes no sense. It doesn't align with the need for a high ROI. Ask any business owner, should we make more of the slow-moving units or the stuff that's sold out? Rolex isn't about to increase production on precious metal models that are already struggling, under retail. No, they're laser focused on those high-demand steel sports models. So let's game this out. Rolex is going to significantly increase production of their most popular steel models. We're not talking about a gradual trickle. We're talking about a steady stream of Submariners, Daytonas, and GMT Masters hitting the market. If they increase production of steel Daytonas by 50%, they could potentially capture a huge portion of that gray market premium. And if this brings the gray market price down significantly, it doesn't matter. That's still a huge profit margin for Rolex and its authorized dealers. They really don't care about the watch dealers. We're talking about potentially millions in additional revenue. This is exactly the kind of return Rolex needs to justify their massive billion-dollar investment. Their high ROI will demand such production increases. But this isn't just about next quarter's profits as well. This rapid production increase is about long-term market stabilization and repairing customer relations. A gray market that's significantly outpacing retail isn't just a short-term problem. It's a ticking time bomb for brand image and long-term customer loyalty. We all know that. We've seen the complaints. Rolex knows that the current situation where their watches are nearly impossible to get at retail is getting better, but it is damaging their brand. By increasing supply, they're looking to put their watches back on the wrists of actual enthusiasts, not just flippers and investors. So what's the strategy? Here it is. A rapid increase in supply. Focus primarily on those high demand, high ROI models. Rolex isn't going to wait around and let the gray market continue to profit off of their scarcity. They're going to leverage their new production capacity to the fullest as quickly as possible. Let's consider the Submariner date as a case study. Retail price around $9,100. Current gray market price about $11,000, $12,000. As supply rapidly increases, we might see this premium evaporate much faster than anyone expects. Perhaps in 6 months, it might be $10,500. In a year, it'll be selling at retail or less. Rolex has every incentive to make this happen quickly. Remember, they need to start recouping that billion-dollar investment. Now, let's talk distribution, because this is where it gets really interesting. As we all know, Rolex's recent acquisition of Bucherer, or is it Bucherer? Their former distributor, isn't just a business deal. It's more than that. It's a move to ensure they maximize their ROI and control their market. This gives Rolex unprecedented control over how their watches reach the market. We could be looking at stricter policies to prevent flipping, maybe even a system to track individual watches. Imagine a world where Rolex knows exactly who bought each watch and when. It's not just possible, it might very well happen. And it's all in service of ensuring those high ROI models end up on the wrists of genuine enthusiasts, not in the hands of flippers. On the other hand, for gray market dealers, this could be the beginning of the end for Rolex premiums. As Rolex rapidly increases supply and tightens its grip on distribution to maximize their ROI, those inflated prices are likely to deflate faster than a pop balloon. We might see some dealers pivoting to other brands or even exiting the market entirely. Many might find themselves stuck with overpriced inventory. In fact, my previous analysis shows that's already happened. For buyers, it's a double-edged sword. On one hand, it could mean easier access to desired models at retail prices. Imagine walking into an AD and actually being able to buy the Submariner that you want. I'm still waiting. On the other hand, it means the days of Rolex as a short-term investment are done for pretty much, any model. No more buying a watch and flipping it for a quick profit. But if you did that, you're not a real collector. Harsh but true. Now, here's the really exciting part. We shouldn't overlook the potential for hot new models. With increased production capacity, Rolex might introduce new complications or even entirely new lines to maintain high ROI and keep interest high as supply keeps increasing. Maybe a new sports model to complement the existing lineup, or perhaps a revival of some discontinued favorites, the Milgauss maybe? The possibilities are endless, and this expanded capacity gives Rolex room to experiment while still focusing on their need for core high ROI models. Look, Rolex is tired of market premiums going to other people and seeing their brand being damaged. In essence, Rolex is playing to win here. They're investing in a future where they control their market, satisfy genuine demand, and capture the value that's been going to the gray market, and repair relationships with the customer base. It's a bold move and one that could reshape the entire luxury watch market. We all know Rolex is the big dog. So what does it all mean? We're looking at a rapid increase in production of popular high sports steel models, a swift market correction, potentially new exciting offerings, and a completely revamped distribution system. This is not a gentle shift. It's Rolex taking control of their market, driven by the need for a substantial return on a billion-dollar investment. They've got to pay bills too. The next few years in the Rolex market are going to be a wild ride. Whether you're excited about finally getting that Daytona or worried about the value of your collection, one thing's for sure, change is coming, and it's coming fast. What's your take on these developments? Do you think Rolex's aggressive strategy will pay off? Share your thoughts in the comments, and I'll see you in the next video.